Hi, and welcome to another episode of Insight Money. Today we'll be talking about Bitcoin and how the Bitcoin halving cycles work. If you like today's episode, please like and subscribe for more future content. Bitcoin has had 3 halving events since its creation by Satoshi Nakamoto, the pseudonym for the individual or group of people who first created and mined the first Bitcoins in 2009. In the first halving event in November 2012, Bitcoin jumped from $12 on the 28th of November 2012 to a staggering $1,000 a year later. That's an increase of over 13,000%. The second halving took place 4 years later, in July 2016, when Bitcoin surged from $576 on the date of the halving to $20,000 a year later in 2017. Finally, and most recently, the last halving took place in May 2020, when Bitcoin jumped from $7,000 to its most recent all-time high at nearly $69,000 in 2021 amidst the global pandemic. That's a jump in the price of over 533% in the space of only 1 year. So as you can see, Bitcoin halvings have had a clear correlation to significant price increases. But you may be wondering what a Bitcoin halving is and how you can use that knowledge to invest in the future. Well, a halving essentially is when the reward for mining new Bitcoins is cut in half, which in turn reduces the rate of inflation for the volatile currency. As shown previously, this then results in the price of the asset being pushed upwards historically to newer and newer all-time highs due to the supply of Bitcoin being cut and not being able to meet the demand. As of 2022, the current reward miners get for each validated transaction is equivalent to 6.25 Bitcoins per block they mine. Before 2009, this reward was 50 Bitcoins, which after the 2012 halving fell to 25 Bitcoins, which then later fell to 12.5 Bitcoins per block mined after 2016. Most recently, the 2020 halving resulted in the current block reward of 6.25 Bitcoins per block, which is planned to again be cut in half to 3.125 Bitcoins per block in a couple of years. So why do these halvings occur? Well, Satoshi Nakamoto created Bitcoin in this way to make Bitcoin a disinflationary asset, which means that this ensures the asset can't fall into hyperinflation like fiat currencies like the US dollar. This adds to Bitcoin's definition as a decentralized currency and means that no one body, whether that be the government or even Satoshi Nakamoto, can't solely control Bitcoin and its price. This instead ensures that the currency is controlled by all Bitcoin users and purchasers. So you may be asking, when is the next halving? As we mentioned earlier, the halvings occur roughly every 4 years. However, the halvings more accurately occur every 210,000 blocks mined. This means that there's no specific day that we can predict when the next halving will occur. However, on average, miners mine a new block every 9.5 minutes, which is equivalent to 144 blocks per day. Using this figure and the fact that as of this video's upload date, we're on block number 760,965, we can therefore calculate that we'll reach the 840,000 block target for the next halving by May 2024. Although this date is only an estimate, as the date may change based on the changing difficulty of mining due to Bitcoin's varying hash rate. So, how from this can we use this knowledge to make and adjust investments in the asset? First, we need to remember that when it comes to all assets, but especially Bitcoin, results in the past never guarantee future results. However, as Mark Twain said, history never repeats itself, but it does often rhyme. We can see that an increase in Bitcoin's price isn't a guarantee that the future price will increase after the 2024 halving. But if the future works like it has previously, we're set to see a dramatic price increase of Bitcoin in the future. So you can use this information however you'd like. However, we'd like to share what we'll be doing in the future. But please remember that this isn't financial advice. We are not financial professionals, and Bitcoin is an extremely volatile and risky investment, especially for short-term holders. Currently, as of right now, November 2022, we're at a price of around $20,000 per Bitcoin. In relative terms, compared to Bitcoin's all-time high of nearly $69,000 last year, $20,000 is relatively cheap when considering in the past, after each halving, the price has gone past the previous all-time high every time. So our plan would be to dollar cost average into Bitcoin every week until 6 months after the halving in 2024. The reason we plan to stop dollar cost averaging 6 months after the halving event is historically the bull run begins around this period, and we usually begin to see growth in Bitcoin's price. After this, we'd plan to sell if Bitcoin raised in price significantly 12 to 18 months after the halving took place, as again, historically, this period is when we've reached the next all-time high. So that's what we would plan to do given the past information. However, this is a simple and basic approach to investing in Bitcoin, and there are better and safer approaches. So what's your plan for the next Bitcoin halving? Do you think it's too risky to invest in Bitcoin, or is it too risky not to invest in Bitcoin? Please let us know in the comments below. Thank you for watching this episode of Insight Money. Feel free to look around the channel for more educational content on business, finance, and technology. This has been Insight Money. We'll see you again soon.